If you've been watching the housing headlines lately, you've probably heard the term buyer's market, especially when it comes to Toronto's real estate. Today, I'm going to walk you through exactly why that's the case, what the numbers show, what's driving the shift, and what that means if you're buying a home right now. As of October 2025, the average detached house price in Toronto slipped to 1.619 million, a drop from the peak of March 2022, which was at 1.948 million. Semi-detached right now is at 1.219 million, which is a drop from the peak of 1.545 in the spring of 2022. Meanwhile, Toronto condos are at 699, which is a drop from the 831 in March of 2022. Inventory with active and new listings are at record highs. The sales to active listings ratio indicates if the market is in buyer's territory, balanced, or seller's territory. Up to 40% sales to active listings ratio is considered to be a buyer's market. 40 to 60% is balanced, and above 60% is a seller's market territory. Currently, detached houses are at 25.8%, semi-detached at 46%, and condos at 18.5%. The data is clear. Lower prices, more homes for sale, and a market that leans towards buyers. Let's dig into why we're seeing these conditions in 2025. Inventory overhang and elevated supply. Over the past 12 months, new listings rose, and the total active inventory remains elevated, giving buyers more options than we've seen in many years. Second, softening buyer demand and economic caution. The economic uncertainty, including the broader macroeconomic headwinds due to the trade negotiations and inflation concerns, have cooled buyer enthusiasm, especially among investors who have completely moved to the sidelines. Third, more moderate pricing pressure. With fewer bidding wars and less frenzied demand, sellers no longer expect the dramatic price escalations of the past. Instead, many are seeing more realistic offers, and some are having to price adjust or wait longer for the right buyer. Longer time on market and slower turnover. On average, homes, whether detached, semi-detached, or condos, are taking longer to sell compared to peak periods, giving buyers more breathing room to shop and negotiate. The average days on market in Toronto is 47. There are exceptions for specific pockets in the city and price points. All of these factors align to shift the balance of power. Supply now outpaces demand, and buyers have advantages many haven't seen in so many years. If you're in the market to buy, here's what buyers are seeing right now: more selection and bargaining power. With many homes on the market, buyers can afford to be picky, take time to compare, walk away, or negotiate price and terms. Potential for discounts or price reductions. Sellers increasingly realize they need to price realistically. That means some listings may sell below recent and understand they will be getting offers below asking price, or at least allow room for negotiations. There is less pressure and more flexibility. The urgency and competition that once defined the market have eased. Buyers can put conditional offers, shop around, and make decisions with less emotions. I see opportunity for three groups. First time home buyers who can benefit from lower prices, affordable mortgages, and lots of supply to choose from. The second group is move up buyers who can take advantage of buying the larger home at a bigger discount from the peak of 2022. And the third group that I see opportunity for are investors who are focused on duplexes and triplexes. There are opportunities in the city. With slower turnover and less fear of losing out, buyers have a better window to get inspections done and confirm mortgage financing. Being a buyer's market doesn't mean everything is perfect or that every deal is a bargain. There are important things to watch out for. Not all neighborhoods or property types are equal. Desirable areas or premium properties may still attract competition. Pockets of demand remain, especially for well-located homes. I'll give you an example. I had a listing in Leslieville. It was sold within 3 days with two bully offers, and we had over 41 appointments over those 3 days. Price reductions do not guarantee value. Sometimes price drops reflect longer time on market, issues with the property, or other factors. Do not assume a lower price always equals a good value. Carrying costs and interest rates still matter. Even if the purchase price is down, buyers need to factor in mortgage rates, property taxes, maintenance, especially if buying an older or a large house. Think 7 to 8 years minimum. In a soft market, resale gains may be modest or slow. Buyers should think long term and avoid assuming rapid appreciation. And a minimum time frame of 7 to 8 years allows the homeowner to pay down some of the mortgage, and with a realistic property appreciation can benefit from having decent equity after 7 to 8 year period time. Competition may return. Markets are cyclical. If economic conditions improve or inventory levels tightens, buyers' leverage could shrink again. Taking action on a property that checks most of the boxes may be necessary. I'll say that again. If a property checks most of the boxes, then it's good to take action. If you're buying in Toronto now, here are strategies to leverage the current buyer's market. 1. Get your mortgage financing figured out. Having a firm financing strengthens your position and helps you negotiate aggressively. Second, do your homework. Remember, real estate is local. Compare similar homes and study the neighborhood trends. Third, use downward pressure to negotiate price and conditions. Many sellers may accept lower offers or concessions. Consider inspection conditions, closing flexibility, and obviously price. Prioritize value, not just price. Focus on long-term suitability, such as the resale potential, the neighborhood quality, the school district for that house, the commute to work, accessibility to transit, walkability to local shop, if that's important to you. Be ready to act when you find a good deal. Inventory is high, but good properties do move, especially ones that are priced right and in good neighborhoods. To summarize, Toronto is in buyer's market territory. Lower prices, elevated inventory, slower demand, and greater negotiating power, giving buyers, whether first time, move up, or investors, a chance to secure more favorable deals. For years, buyers had to rush as soon as a property came to the market. Book a showing right away, be prepared to compete against other buyers without conditions. It was strictly based on who would pay the most and have no conditions. The market was heavily skewed towards sellers. Now, finally, it's a market the buyers have been waiting for many years. It's a great time for buyers who are financially qualified and have employment security. If you're considering buying, this is a window of opportunity. With the right strategy, you could emerge with a home that offers value today and growth into the future. If you're thinking of taking the plunge and buying in Toronto and want to discuss your personal situation, reach out via the link below. I hope you've enjoyed this video. Thanks for watching, and I'll see you in the next one.